In 1995, at only 21 years of age, Norbert Lou was entrusted by his mother to manage her $60,000 retirement account, virtually all of her savings at the time. And 2 years later, by 1997, he'd made a really strong start. By picking individual stocks like Intel, he'd managed to beat the market by about 10% per year. But in 1997, he stumbled across a little-known home builder called NVR. He would end up allocating about 35% of the portfolio to that stock, and NVR would go on to become the best investment of his entire career. This is the third video in a three-part series here on the channel looking at some of Norbert Lou's best ever investments. If you haven't seen part 1 or part 2, be sure to go and check those out, and of course subscribe to the channel if you haven't already so that you can catch future content as soon as I upload it. Now, a young Norbert Lou first stumbled across NVR when he was working as an analyst at a somewhat unusual kind of small boutique investment group called Brown Brothers as an analyst. Brown Brothers only hired about 3 analysts per year, and they actually maintained like a library of different SEC filings. This was still largely pre-internet days, and it really gave quite the informational advantage to investors that, you know, had all these documents lying around. It's not like people could pull up the same information on the internet in 5 seconds like we really could today. And whenever Norbert Lou had a spare moment, he would spend a lot of his time in that library of these filings just looking for investment ideas for his mother's portfolio. And more specifically, around 1997, he was actually looking for companies that were doing quite a few share buybacks. They were retiring shares. His basic idea was that if a company was repurchasing shares, they were probably generating strong amounts of cash on a pretty consistent basis, and they had a capital allocation framework that meant they were, quite interested in returning those cash flows to shareholders. So it really caught his eye when he stumbled across a press release from this little home builder called NVR, which said they had a 4-year plan to repurchase about $100 million worth of stock. Now, that's not unusual for a company to issue a press release outlaying their share repurchase plans, but what was unusual is that $100 million repurchase was a huge percentage of NVR's market cap. The market cap at the time that press release came out was only $275 million, so they were looking to buy back more than a third of the entire shares outstanding over a 4-year period. With just a little more digging, Norbert Lou also found that NVR seemed to be quite a high-quality business. He said that the pre-tax return on capital was 55% that first year that he looked at it. That was about 2 times what most of the other home builders in the industry seemed to be doing. NVR were able to generate these returns on capital by using quite a bit less leverage. Plus, they'd grown operating income 148% from 1993 through to 1996. Now, in terms of NVR's business, they used to be very much the traditional home builder type business model, where they would essentially deploy a lot of their capital into purchasing land. They would obviously go through the home building process, and then they would sell that land to the end purchaser of that particular home. And within that business model, there's really a lot of built-in cyclicality. You're kind of inherently speculating on land prices in a way, and when land prices take a sharp dive, you've got a lot of your company's capital tied up in that land, and you can wipe out a lot of equity very quickly. And home building is a cyclical business, and having this sort of built-in land speculation essentially can really make the swings through the cycle for shareholders' equity very, very wild. And NVR actually did experience bankruptcy around 1992. They were going through this traditional kind of home building business model. A lot of capital was tied up in land holdings. They ended up taking on a lot of debt when land prices went down, and eventually they had to file for Chapter 11. But after emerging from bankruptcy, NVR were really looking for a different way to do things, and they came up with quite a unique model at the time in the home building industry, where rather than spending their capital on buying plots of land outright, they would instead write options on that land, which gave them the right but not the obligation to purchase these different plots. These options would usually cost NVR only 5 to 7% of the land value, so it tied up a lot less capital, and it also more or less eliminated the kind of land speculation component inherent in the typical home building business model. And it also allowed them to earn a high return on invested capital, generate more free cash flow, and basically grow their capital much faster than the typical home builder. Just to give you an example of that, Norbert Lou actually wrote in the Value Investors Club about NVR, which I'll get to in a sec. And from 1999 to 2000, NVR grew their home sales by $325 million, yet their working capital in the business only grew $11 million. So that just shows how kind of capital light the underlying NVR business had become. Now let's talk about share buybacks. If you've ever heard of NVR before watching this video, you will probably know that they are basically the poster child for share repurchases. And this is something that I've covered here on the channel before with NVR. We actually did a live stream on Punchcard about a year ago where I went through some of the numbers here. And recently Monish Prabhai actually did a talk at Boston College, I believe, going through some of the numbers for NVR. So their share repurchase success is pretty well known at this point. But back in the 90s, when Norbert Lou kind of stumbled across NVR, this is what the share buyback picture sort of looked like. NVR, due to their still cyclical nature, had pretty much always traded at a high single-digit multiple of earnings, sometimes creeping up into the teens, and it allowed them to retire a lot of shares over a long period of time. The percentage of shares retired has been pretty bumpy, and I should say that in more recent years it has actually slowed down a little bit. The business is still repurchasing shares as much as they can, but they're actually issuing a bit more stock-based compensation than they were in the past, so those two things are sort of fighting against each other. And the percentage of shares retired was always a little lumpy, but it was pretty much always very significant. So in the 10 years from Norbert Lou's first investment in 1997 through to obviously 2007, shares outstanding went from 11.09 million to 5.5 million, which is just over a 50% kind of share buyback over a 10-year period, which all things being equal would essentially double the stock price. You have 2 times the ownership in the underlying business. And up here I will put a chart of NVR's shares outstanding from 1995, not long after they first went public again out of bankruptcy, through to the latest share count that we have today. So NVR had this weird combination of a lot of really good factors. They had a high but admittedly lumpy return on invested capital and free cash flow. They had sort of this perpetually low earnings multiple in the market for whatever reason. And they funneled basically all of their money towards share buybacks. They never paid a dividend or anything like that. And it allowed all of these factors to work together to generate phenomenal returns. And this is what Norbert Lou had to say about NVR on a Value Investors Club post in 2005. He said, "Yes, it's been a crazy ride. Shah's discipline, who I believe is the NVR CEO, in sticking to the landlight model and returning excess cash to shareholders deserves much of the credit for the company's success. Also, Shah was way too greedy to make it to my favorite CEOs list. His mansion was paid for with wheelbarrows of liberally issued stock options. NVR would have been a truly fantastic one if they had just kept their stock option appetite in check." So yes, NVR was doing these monster share buybacks, sometimes north of 10% of the shares outstanding in a single year, but increasingly it was offset by some stock-based compensation, which Norbert Lou clearly wasn't super happy about. But regardless of that, the investment worked out just spectacularly. So I want to walk through some of Norbert Lou's purchase history with NVR. He made his first buy in 1997 with his mum's retirement account. He accumulated a 35% position in the portfolio over a couple of month period with an average cost of about $23 per share. At that time, NVR was trading at about 7 times earnings, and they actually also published order backlogs around that time. So he could see that the next year or so looked really good in terms of also future growth for NVR, which really made that 7 times earnings multiple look very cheap. Now, NVR actually went on to double in the first year, and I think there's a lot to be said here about Norbert Lou continuing to hold on to this business and actually even adding to it at higher prices. So after the first year, he said, "I knew taking profits just to take profits wasn't rational, especially when the taxes are factored in. The guiding question was, is there a more attractive investment for my mum to buy?" And he came to the conclusion that there's not. So a couple years later, in 1999, he still held all those shares that he'd purchased at 23, and he actually added to the position at about $40 per share. By March 2000, the stock was trading at about $54. He said, by buying a great stock and just hanging on to it, I ended up seeing how that could work out better than a lot of strategies. That really had an impact later on how I viewed the ideal investment. And right around this time, Norbert Lou was actually getting increasingly interested and educated on the ideas of Buffett and Munger. He was reading about, how much Buffett and Munger appreciated really high return on invested capital businesses. And he said the Buffett-Munger emphasis on quality of business and return on capital really explained why NVR was working so well. You actually want companies that have such bountiful reinvestment opportunities that they don't buy back any shares. I know a lot of people talk about a company's ability to reinvest as being important. I think even then it's underappreciated. It's very hard to beat a business that's compounding at a naturally high rate of return. At this point, NVR was becoming a very large position, and this is actually when Norbert Lou stumbled across the whole sort of punch card analogy from Norbert Lou, which he would, of course, go on to name his investment partnership after. He said, it gave me a little more courage to apply it. I felt that I wasn't being a irresponsible lunatic, of course, by continuing to hold this huge position in NVR. Now, in 2001, this is 4 years after the first purchase, Norbert Lou actually attended his first Berkshire meeting. He said that at that time it was around $143 per share, and this is actually at the point where he wrote a very famous now write-up on the Value Investors Club on NVR. I think a lot of people don't realize that write-up was actually 4 years after his first purchase and when it had already been a multi-bagger, and even from there it kind of continued to do extremely well. So when he did that write-up, it was about $143 a share in 2001. He won the $5,000 prize on Value Investors Club for the best idea of the week. 1 year later, it was up another 140% to $344.50 per share. And finally, the run continued for Norbert Lou with NVR right up until pretty much the global financial crisis, or a little bit before that. He ended up selling NVR in two major chunks. He sold quite a bit at about $900 per share in 2005, and he sold the balance of it in February 2007 at about $700 per share. NVR had come back down a little bit, and that second sale in 2007 included those shares in his mum's retirement account, so she sold her shares effectively for about $711 per share in February 2007. We don't get a lot of commentary from Norbert Lou around why he sold. Of course, it turned out to be great timing given that was right towards the tail end of a massive housing bubble. I don't know if he had some sort of insight on that, but looking at kind of the underlying investment thesis outside of a real estate bubble, the buyback rate was slowing. It was only 2% in 2006, and when NVR did go through the global financial crisis, they were actually a net issuer of shares in 2008 and 2009. Now, interestingly, Norbert Lou actually bought back into NVR reasonably recently. We saw in a 13F filing that he bought back into NVR in the first quarter of 2020. It was a relatively modest position. I'll put the numbers up on the screen here for his US portfolio, but he actually turned around very quickly and sold that position entirely the next quarter. So what sort of return did Norbert Lou actually generate here? The short answer is an exceptionally good one. So from 1995 through to 2003, about 8 years after taking over his mum's $60,000 retirement account, his mum was now a millionaire, so he's done an exceptional job of managing that money. We know that he bought at $23 a share in 1997, $40 per share in 1999, and presumably was still adding at about $140 a share in 2001 when he wrote his Value Investors Club write-up. He then went on to sell somewhere between $700 and $900 between 2005 and 2007. So in the absolute worst case scenario, he probably got about a 5x on some of those shares in about 4 to 6 years. And for his best, earliest investments in NVR, he got about a 39x return over a 10-year period. Now, I thought it would be interesting to share actually what's happening happening with NVR today, because to a large extent the playbook kind of continues on. They're doing a lot of the same things that they were doing back in the 90s, but to a slightly slower and less aggressive extent. So I'll put up a chart here showing the absolute growth in net income and also the growth in earnings per share. The growth in earnings per share, of course, will be much faster because they've been doing all of these buybacks, and those two things are continuing to grow at NVR, but they are growing at a slower rate. The absolute growth in net income has slowed down, and with all the stock-based compensation that's going on and some slightly higher P ratios that NVR's traded at in more recent years, the pace of the share buybacks definitely isn't as impressive as it once was. As I understand it, some other home builders are actually copying now the NVR model of a more capital-light approach, using these options instead of just buying land straight up. Presumably that's resulted in a bit more competition for NVR, and I'm sure just their absolute size now makes it a little more difficult to grow. Looking at some of the underlying business quality metrics, their return on invested capital is now in about the mid-teens versus being in the 30 to 40% plus range when Norbert Lou was first looking. But in the past year or so, that earnings multiple has come back down, and hopefully that will allow the buybacks to again be a little more successful here for NVR. Now, I think the lessons here from the NVR investment from Norbert Lou are best summed up by Norbert Lou himself, where he said, I was lucky to buy a stock early on that taught and reinforced so many good habits. And I think there's a lot of factors that were at play with NVR, which really all worked kind of harmoniously together to make this like an all-time great investment. He had a good business, a company that was earning a high return on invested capital and generating a lot of free cash flow. It had a long runway for growth. It had a low earnings multiple, and it had that low earnings multiple for a long period of time, and for that reason was able to make exceptional use of share buybacks. And Norbert Lou had the immense discipline to not only continue holding NVR, but to continue buying it at higher and higher prices, when he clearly thought it was still the most attractive investment opportunity in his investable universe. And I think a lot of people would struggle with that. We tend to anchor ourselves to previous prices that we've paid for companies, and Norbert Lou did a very good job of avoiding that trap with NVR, and it allowed him to make a lot more money for him and his mum and his investment partners. And I thought it would be interesting finally to finish off this video just to do a quick breakdown of some of the drivers of the return at NVR. I've looked here from 1995 through to today, so this isn't necessarily Norbert Lou's exact investment time frame, but it's basically the last 27 years or 28 years at NVR. So the net income growth has definitely been the main driver. So NVR's low capital business model, which allowed them to grow a lot faster, has actually been the main driver. They get a lot of praise for their buybacks, but it's really the growth in the underlying business that has helped shareholders the most in the long term. And that net income has grown 92.8 times since 1995. So incredible long-term growth on the underlying business. The ownership percentage per share, or the kind of extra multiple that you've gotten on top from the buybacks, is about 4.6 times. So that means they've bought back almost 80% of their shares. If they bought back half their shares, you'd get double the ownership per share. If they bought back 80% of their shares, you'd get 5x the ownership multiple. So for NVR, that's sitting at about 4.6 times. And the multiple has actually come down a bit recently. So the PE ratio has actually barely changed from 1995 through to today. It's only grown about 7% or something. So the multiple is about 1.07. Not too long ago, that was almost a 2. So that would have really expanded the multi-bagger kind of factor here for NVR. But if we combine all of those things together, so 93 times net income growth times 4.6 times increase in ownership times 1.07 gets us to about a 450 bagger in 28 years, which is about 24% compounded. So a spectacular investment again here from Norbert Lou. I think it's one of the all-time greats, and it really shows the power of a great business combined with buying back shares at cheap multiples. So I do hope you enjoyed that story of the NVR investment for Norbert Lou and this overall 3-part series. If you did, please subscribe and let me know down in the comments below who you would would like to see a 3-part series on next, so that I can look at some of their best investments as well. But that's it from me for this one, and I'll see you in the next video. Cheers.